Today, I'm going to talk to you about how I became a trader, a little bit about my life story over the last 30 years of trading and how it affected my life and why I got there in the first place. Hey, for those of you who don't know me, I'm Rob, and for those of you who do know me, I'm still Rob. It's Coffee with Rob. Let's have some coffee and let's carry on talking. A good coffee always makes the day good, especially when there's a good story to be told, when there's something of interest on the go. Let's get started. Let's go back all those years to when I started trading. When I grew up, my whole life's ambition was not to work for someone, not to have a boss, not to have to go to work every day. And what happened? I immediately had to go to work every day. Got a job, was getting up early in the morning to be at work by 7, and then I had to work till 5 in the afternoon. And the job wasn't really close by. It was like more than 50 kilometers away from where I lived. It was insane. And then I ended up having to go to the military for a couple of years and then come back and go back to that old job again. But at that time, I'd improved a little bit. I'd made it a little bit better. I'd got a better job and I was doing what I loved. And I was working better hours as well. I had to go in at 8 and maybe come home at 4. So it was a little bit of a better life. That said, I still had this dream and I still said at the end of the day, I want to work for me. I don't want to work for someone else for the rest of my life. By the time I was about 27 years old, I had decided enough's enough, got married, and well, I got married just before that, and I decided my family's not going to have to put up with me just getting up and going to work and coming home and struggling with to make the bread and all the rest of it. I'm going to go and make decent money. I'm going to go and start a retail business. Now, I grew up, and I used to play at having a shop. I used to love thinking I'll have a shop and I'll have a little till and I'll be working behind the counter. So I started a retail store and I started working. But just before that happened, I'd already got on or bought myself a course from a share company. And it was a big file. It was a huge file, this massive file. And in that file was all these different systems that you can use for trading and how to trade. They gave you a demo and they just released computers. So we got what was then known as a floppy disk, a real floppy disk, with a little program on it that you could use as well. So I thought this was the bee's knees. Paid an absolute fortune for this course. So it even had a demo thing with it where you could actually phone someone and do a demo trade. It was quite insane actually, because you could phone them and say, I want to buy X, Y, and Z, and they would make a note of it and they would control your demonstration account for you manually, not like now with the computers and all the fancy algorithms and all click buttons and all the rest of it. In those days, there was this insane thing where you actually picked up a real telephone and you phoned someone on a demo account and said, buy Anglo-American. Can you imagine? Now, can you imagine how wide the spreads were? And can you imagine how slow the trading was back in those days? I was effectively buying the newspaper in the morning and in the afternoon. And inside the newspaper, they had these couple of pages with all the share prices in. Now, we weren't trading Forex. We weren't trading gold and platinum and commodities. We weren't even trading indexes. We were literally only trading shares. And the basis of share trading back in the day was this. You traded with what money you had. So in other words, there was no gearing. There was no 1 to 100. There was no 500 to 1 or anything to that effect. It was a question of if you had $1,000, you traded with $1,000 and that was it. That's what you had. Let's have some more coffee. Now think about this. How are you going to make a living trading with a small amount of money? I look back then, 100,000 Rand was like 10 million Rand now, but okay. If you had managed to make that amount of money and my business was doing pretty well, I thought, okay, do you know what? I'm going to take some of that money. I'm going to start putting it into trading for real, because the way the trading system worked back then, and it was pretty straightforward. There wasn't any complications to it. The big thing is that we did understand that it wasn't fractal, that it wasn't maths, that it wasn't algorithms doing the trading, that it was human beings, because we weren't looking at computers really, we were looking at ourselves. We actually took pieces of paper and we drew charts on them and we drew lines through the charts to get our figures. But having a little floppy disk and a new computer made it a little bit easier, and you could plot the thing on a little chart on the computer, which was amazing. Imagine, yeah, first time we had computers, it was great. We didn't have mobile phones back then. Think about this. No mobile phones. It was the normal push button or dial-up phone. So that the principle of the trading was you buy a maximum of 10 shares. It's a bit like the investing we do now. You buy a maximum of 10 shares and you risk 10% on each trade. 10%, not 1%, 10%. So you take a 10% risk on a trade. That way, if the trade actually loses, you only lose 10% of your account. If the trade wins, you do well. It was more like an investment than an actual trade, if you think about it. It was a full-on investment strategy because the possibilities of losing 10% were just insane. Imagine the stop loss of 10%. That's huge, massive in the greater scheme of things. Then what you would do, the simplicity of the trading was this, and we didn't call it price action or anything to that effect. This was just the only system that was available to mankind at the time. Effectively, we took the chart and we put a 20-day moving average through it. That was it. We put a 20-day moving average through the chart. If the price went above the 20-day moving average, we would buy. And if the price went below the 20-day moving average, we would sell. That was our trading. That's all we did. Nothing else. That's how complicated it was to trade. Imagine that. Imagine that's your trading system. You put a 20-day moving average through the price. If it's above the 20-day moving average, you buy. If it's below the 20-day moving average, you sell. And then you were trading with 1-to-1 money, not 500-to-1 or anything to that effect. And if it went wrong by 10%, you got out of the trade. That was it. That was your trade. And we traded like this for quite a long time. What changed everything was within a couple of years of having computers, along came the brokers with contracts for difference, futures, and these sorts of things. And along came the computers, and along came the Forex traders. The Forex guys came into the market with a bang, and they said, you can make millions by trading Forex. Come on our Forex courses, and we'll show you how we trade with pips and how we make money. Look, it was already quite a few years in when this happened. It took a while, but they had it going. And they had it online. All the traders were attracted to this, including myself. I mean, I was also attracted to it, but I didn't go on a course. I just sort of took the brokerage account at face value, and I looked at it and I looked at what we had. And I must admit, I was really cautious about trading Forex. I thought, well, this is a bit tricky. I'd already dabbled now in trading indexes. I'd gone into the indexes and I'd started trading a few commodities, and I was trading shares. Would you believe trading shares on futures, thinking, well, this is the future. Excuse the pun. This is the future. We're trading futures. So there we were, trading futures, and it looked like the way to go. And along came Forex, and they came in with a bang, and along came contracts for difference to make it even better. And you slowly but surely you get involved in all these things. But what this actually does to you as a trader, or as someone who grew up with normal trading, it takes your mind off track, takes you off track completely, takes you on a completely different direction. Because now you can imagine the information that we have today about all the things that don't work, we didn't have back then. We just had all these people piling into the market with all these fancy new indicators and all these fancy new systems saying this is what works and this is what makes you money. So you dive in and it all looks perfectly sensible, and you start trading with all these different systems. And of course, along you go, along the road of, oh, this system doesn't work anymore, so I'll try that one. Oh, this system doesn't work anymore, so I'll try that one. And so you go on and you keep on trying different systems, because in your mind, you start to realize that you start to think that systems are what's going to make you money. You start to believe that maths is the answer to your question. And you start to see all these squiggly lines, and you start to see all these things happening on computers, and you actually start to believe that that's what's going to make you the money, even though you didn't grow up with that. And then comes my aha moment, and it says to me, do you know what, Rob? This is not working. This is sending you down a path of disaster. You can't continue on like this. You're going down the wrong road. You were making money by simply trading above a moving average, and now suddenly you're struggling with all these fancy fandangled systems. So something's wrong with the systems. Now the first thing you believe is there's something wrong with the systems. Not you. Can't be something wrong with you, can there? Must be something wrong with the system. So that you start changing the systems. You start looking for your way back to where you started. But there was a point where I turned around and said, do you know what? I have to stop right here, go back to the beginning and see what's going on here. Because this is leading me down a path of disaster that I don't want to go on. So the first thing I did was separate my investing from my trading. That was the first thing to do. To say, right, investments are investments, trading is trading. Because trading is now geared. It's no longer a one-to-one. So now we have to take the trading and separate it completely, because you can lose a lot more trading with geared trading than you can with investing that's not geared. So we separated the two. And then I made the decision, very clear decision, that trading will be trading, investing will be a set and forget. I made the very clear decision on that. You buy something to invest in, you're investing in it for the long term. It's time in the market, not timing the market. So that decision was made, and those investments were put to the one side. And this was probably close on 20 years ago, between 15 and 20 years ago, we decided on that. Then we decided trading, we have to master trading. We have to figure this out. We have to figure out what is going wrong. What's happening here? Why was it working before and now it's starting to struggle? And I sat and I thought about it, and the aha moment came to me when it said, Rob, do you know what? It's not about the system. It's about the strategy. What were we doing when we started trading? We weren't following lines. We weren't jumping around the markets, and we weren't jumping around systems. We had a very simple policy. Have a stop loss, 10%, have a take profit, and if it's above the line you buy, if it's below the line you sell. It wasn't complicated. Why are we overcomplicating it now? The aha moment said to me, you know what? We actually managed our risk. But how do we manage our risk now that we've got geared trading? What do we do now? This is not as simple as having a 10% stop loss, because if I have a 10% stop loss, I figured out if I had a 10% stop loss, I could lose the whole account on geared trading. 10% is a huge amount on geared trading. 500 to 1, 10%. It's massive. So we had to look at that. We had to look at the whole thing. And the aha moment came, and we said, you know what? We need to risk 1% of a sizable account. In other words, if we've got a $100,000 account, we can only risk $1,000 per trade. Taking 10 trades, we're risking 10% of the account. But that $1,000 is going to make us a couple of $1,000s per trade. So we could make $20,000 per 10 trades quite easily, which is 20% of the account. If we make 20% per annum, we're actually winning on the account. When you sit down and think about it like that, kind of changes everything. And then the next aha moment was, ooh, hang on a minute here. These lines are not what's making us the money. If we go back to the beginning, how did we used to do this? We used to pick up the phone, we used to phone a broker, we used to trade. Someone on the floor would be trading against all those other traders, shouting and screaming, buy, sell, buy, sell. There's real people out there buying and selling in the market. And that came to fruition, and I realized, hang on a minute, here we go. This is actually all about people. This is actually all about people buying and selling in a market, just like in the shop. People go to the shop and they pay what they think is the correct price, and the people in the shop sell for what they believe is a fair price. Same thing happens in the stock market. You buy a share based on what you think is a fair price for you, and that person sells it to you because they think it's a good time for them to sell it to you, and it's a fair price for them. Quite simple, really, when you think about it. And so I carried on, and for the last 15 to 20 years, I figured out that trading is not about lines. It's about strategy. It's about psychology. Because the one thing I realized at the time as well is that fear kicks in when you trade too big, when you put too much money in, when you're risking too much, you can't sleep at night. And I started to realize that fear is a big factor in my trading. FOMO, fear of missing out, that just came to them and whacked me on the back of the head and said, you're taking too many trades on FOMO. You know, you see a trade and you think, if I don't take this trade now, I'm going to miss out on it. You know, I still do that today sometimes. It's crazy, but even though you know about it, you still do it. And that was how I got into trading in the first place. And that's how I kind of went through my trading career. Then for the last 15 years, let's say, of my trading career, it's all been computerized. It's all been geared trading but I still have my investment accounts. And my investment accounts are what makes the money. The trading is addictive, so it's been fun. So you keep on trading. I must admit, I left trading a couple of times to carry on with my businesses to try and get away from it. But that normally only lasts a couple of months, and you're back into the whole setup, and you're back into the trading, and there's still money left in the brokerage account, and you put it back and you carry on. You can never leave it for more than 2 or 3 months. Believe me, you're going to try. You're going to quit. You're going to try and give up. And within 3 months, you'll be back every single time without fail. And I think the brokers know this too. This is something that everybody does. So yes, I have tried to stop trading a number of times over the last 30 years, and it hasn't worked. I've always ended up back, and mainly because trading has always been a fun thing to me. I've always enjoyed doing it, not because of the money so much, because the money comes from the investments anyway, but winning at trading can be quite exciting. That said, losing can be quite demoralizing as well. If it goes against you, you start feeling like the market's like got it out for you. They're watching you. They're trying to take you out. They're looking for your stop. All those things come to mind. There's a conspiracy against you. The guys are sitting, the black hats are standing by your front door just waiting to take your account out and stop you from making money. I've gone through all of those over the years. Like I say, then for the last 15 years, it's been smooth sailing. The aha moment came to me, and I just kept on trading from that moment on with the strategy. And you know what the strategy is. I tell you the strategy every time, guys. And it's basically win more on your wins and lose less on your losses. In other words, work out how big your trading account is. Trade, risk 1% of that account on every single trade, and try to make 2%, try to make 3%, try to make a little bit more on every single trade. It's a simple coin flip strategy of if you flip a coin 10 times, you're going to win 5 times and lose 5 times in all probability. Lose, win, lose, win. That's how the probability works with heads or tails. Same in the stock market. Whether you've got a system or not, you're going to win 5 times, you're going to lose 5 times. So you want to win more on the 5 times that you win. Simple. You know, too many people think that the stock market is objective. Forex market is objective. That it's maths, that it's fractal, and that some AI is going to make you money, some bot, ever. When the reality is, it's subjective. The market is completely subjective. It's not objective. The market's made up of people, and the market's 50-50. Because there's a buyer out there that thinks he's got a good price, and there's a seller out there that thinks he's got a good price. It's got nothing to do with maths. What do you think moves the markets when somebody stands up and they reduce the interest rates, increase the interest rates, talk about the economy? Is it maths that's moving the market around, or is it people that's moving that market around? Answer that question for yourself, and maybe you'll get the aha moment like I did all those years ago, where I realized that it's people that make the world go round, not maths, not even science. People make the world go round. People make the decisions to buy and sell. People get involved in things. Now, keep in mind there is a big difference between investments and trading. Investments are set and forget. You're investing in something with a view to making a profit in the future, and you're leaving it set and forget. Trading, you're also investing in something with a view to making a profit in the future, but in the very short term. You want to make it quickly. In other words, you want to see the price move up, and you want to take the profit as soon as you possibly can. Trading is something that you have to master, whereas investing is something you do. Just keep that in mind when you're trading. But guys, that's my story, and now I've got to the point where I have this YouTube channel, which is growing, where I can show you guys how I trade so that you guys can follow along and figure it out. The big problem that I have is that people don't like to hear that trading is difficult. They don't like to hear that you can't make $1 million in a day, and they don't like to hear that you might actually have to learn to lose. They don't like to hear that trading's risky and that 70% of traders lose money in the trading market, and in fact day traders who trade on the 1-minute charts and 5-minute charts, 99% lose. These are things that people do not want to hear. It's not in their mindset. In fact, if I tell you that 70% of traders lose, you will believe that you're one of the 30% that's going to win, no matter who you are. That is just a fact of life. Nothing we can do about it. It's human nature. It's who we are. You are going to believe you're going to be a winner, and it's a good thing. It's good to be positive, and it's good to believe that you're going to win. But you also have to accept in your trading career that you are going to have to absorb losses, that you are going to have to take losses before you can become a winner. You have to going to accept that you are not going to learn to trade in a week. It's going to take you a couple of years to learn to trade. Do you think that when I started trading on those little paper charts that I learned to do that in a week? I had a file, man, a whole file I had to go through. That took me a year just to go through the file, just to go through the course. It was really difficult, especially when I was working at the same time. You don't learn to trade in a week, guys. That doesn't happen. You know, there's a lot of people out there that'll say to you, start trading, you'll make $1 million in 3 days. That's not going to happen, guys. If that was true, don't you think everyone would be doing it? It takes you a couple of years to even become profitable in the market. Some people a year, some people 2 years, some people 5 years, just to become profitable in the market. I get this question all the time. Can I make a living out of trading? What kind of a question is that? You know, you're asking me if you can make a living out of trading. And the people that ask me this question, I want to ask you, do you have $100,000 to invest? Because if not, then maybe you can't make a living out of trading. If you do, then maybe you can, that or more. Because think of it this way. You're going to make 20-25% per annum. On $100,000, that's $20,000 or $25,000. Can you live on that? I don't know. Can you? It's not a lot. It's not a lot when you work it down. It's not a lot. But if you can, that's great. No problem. Now, you've only got $10,000. Can you make a living out of that? It's only $2,000 a year, 10 or 20%. Why do you think you're going to make 200% on this money? Because you're not. You're not going to make that much money. So people ask me, can you make a living out of trading? Of course you can, if you have enough to invest. You can also go bankrupt from trading if you have enough to invest. That's what trading is. If you were to start a retail store today, would you be able to do it with no money? Would you be able to do it with $10,000? Probably not. But if you had $100,000, you might be able to do it. You might be able to open that retail store. But you probably need $200,000 or $300,000. If you want to be profitable, you're gonna need to have some form of value that you can invest to become profitable. That's why a lot of people came up with funded trading. Funded trading came out and they started offering people funded accounts. Now there's a lot of controversy around it. I mean, there's YouTubers out there making videos about prop firms and calling them scams and whatnot, and quite a few of them are. What I always recommend to people is if you don't have the funding, there's nothing wrong with taking a funded trader account and paying less for it. You pay $100 for a $25,000 account. Maybe you pay $400 for a $100,000 account. But here's the trick to this, guys. When you make a bit of money off of it, the sooner you make the $500 back that you paid or the $100 back that you paid, withdraw it and put it in your own bank account. Then that account's completely free. You've made your money back. I've seen people that complain about prop firms being scams, saying I lost $100,000 in a prop firm, and I'm thinking, how did you do that? Why would you have left that much money with them? Why didn't you withdraw it when you were $1,000 in profit, $20,000 in profit, $5,000 in profit? Why did you leave all that money with a funded account? That in itself is insane. The minute you make a profit, you withdraw it, you get it out of there. That way it's cost you nothing, and you've got an account, and you've got a sizable account which you can actually make a living out of. If you want a funded account, I did leave a description in the box below as well. One that actually works, one that you don't have to worry about how you trade, or you can trade the news, you can hold trades over the weekend. Go and have a look at it, it's up to you. But that's for people that don't have that base, that cash asset value that they can put into a business up front. That's funding that they offer you. So that's available to you. You can look around and see which one works best for you. Like I say, there is something in the description if you want something like that. But it's a great way to get into the market if you can't afford to get into the market. It helps. It gives you a head start and it gets you on the road. Because not everybody's got $100,000 to invest. Not everybody's ready for that. But at least if you got a funded account, you can have that $100,000, you can make that $20,000, and you can have something in your bank account, you know, that sort of scenario. But that's my story, guys. That's how it goes, and I just thought I'd let you know that's where you can go with this whole scenario. I want to thank you for watching, and if you want to know more about trading the charts or systems or price action, if you want to know more about the strategy, go and watch my last videos, which tell you everything that you need to know in trading. Till the next one, guys. Enjoy the weekend. Cheers. Ciao.